Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Monday morning, March 8th, 2021. Thank you so much for joining me today. Well, we got what we wanted out of the stock market on Friday. The SPY ETF reversed, got back above the 50-period moving average, which we said was kind of like that big line in the sand. If you happen to be day trading last week, there was some really crystal clear market internals that gave us the exact spot to start buying again Friday morning. We got a really good, consistent push off the lows right around 10:30, 11 o'clock. It was exciting, actually. It was the first time we were actually able to get in there and buy some stocks with conviction compared to the last couple of weeks. So now what? What actually happens now? Well, we're starting to see a little bit of rotation. Oil and gas stocks specifically have been very strong since November, actually. We've been all over that. Every time we do our sector rotation homework, basically, we are looking for which stocks are leading now and continuing to lead, and we've been all over those. So hopefully you've been taking advantage of some of those. CPE, I think, was one of the bigger ones last week, 134% rally over the last month or two. So now what? Now what's going on? So we're actually starting to see a little bit of sector rotation into industrial stocks, which, by the way, that's a huge part of learning how to trade successfully, whether it's a bull market, a bear market, or any kind of market, is really being in the best stocks at the right time. You don't want to be involved in penny stocks. At least I don't. I don't do anything with penny stocks. I'm only looking for stocks that are leading and plan to lead, which actually takes us into electric vehicle stocks today. Tesla's been getting pounded. NIO got pounded after earnings. XPEV, XPeng, actually had earnings earlier this morning. I'm going to show you the unaudited numbers, but essentially what happened is, let me actually share the screen. We ended up having increased revenue, increased margin, and LiDAR technology coming out soon. So now here's the big question. We get this question all the time. Is this stock one of the best stocks to buy now? Is this stock, quote unquote, on sale? Well, just because the stock fell doesn't mean that it's a buying opportunity. We've seen that in plenty of stocks where they get crushed, and they get crushed because they should. This stock actually, now, one of the things that we look for, you know that we're always looking for the deep pockets. We're always looking for the smart money. If you go a little deeper into the price action and you start to learn to read the tape, I can actually comfortably say right in this area is where the smart money started to get involved. That gap up, the pause, the push. Maybe 70 was a little bit overdone, 75, 76 in that area. But now we've scooted all the way back where the stock price is right back where the explosion began. I actually think, and I can confidently say right now, I'm going to be looking to be building a position between 22 and 28, looking for a longer term move, and then looking for next quarter's guidance to be good. So down in this area right now, it's around 27. I don't even know if we're going to get a little bit pushed lower, but if we do get one more day lower, I'm going to be looking to start adding and building that position within that window. Now, again, this is a little bit longer term play than we normally do. We're usually looking for the next move. We're looking for an initial profit target of anywhere from 12 to 20%. I think we're going to actually get more of that once this stock catches a bid and holds here. Now, the thing here is, if you want to be a little bit more conservative on the stock pick, you wouldn't actually be looking at the daily charts. You'd actually be using the weekly charts, which will take us over here. And you can see the weekly charts are what we call well offered now for consecutive weeks. So the more conservative play here with the stock would need to be getting back over 36, which is still half the price of where it was. So there's two different entries here. If you're okay with buying it into what you believe is an area where the tape is telling you that smart money started to build that position, where the institution stepped in and pushed it up, I'm looking between that 22 and 28 area to start a little conservative over that 36 area. So sticking with this sector, sticking with this industry group, NIO actually got hammered last week after earnings, spiked back a little bit. You can see it's actually down again today. Tesla, again, electric vehicle stocks are getting hit and they're getting hard. But the thing here is, are you investing or are you trading these stocks? If you're a stock trader and these stocks are coming down, you're going to have some volatility that you can trade both on the long side as well as short selling the stock. There's a difference between trading a stock and an investment. I'm talking about a little bit longer term play here with XPEV, where it's not necessarily looking for a trade over the next 5 to 10 days. I think this is a little bit longer term play. So getting back into some of the ideas that we've been watching, again, we've been talking about oil and gas stocks, and specifically Chevron, oil and gas integrated, Chevron and ExxonMobil. Now, you would look at these charts, you might say, wow, they're overextended, but they're really not. It's a very orderly move higher. And if you know anything about trading commodities, and never mind trading commodity type stocks, and this is oil integrated, is when they catch a bid, when they start to trend, they typically have these slow grinding moves, and we're starting to see that in Exxon and Chevron. Digging a little deeper into exploration, we have CLR. Again, some of these stocks have exploded. Hopefully you've been taking advantage of these over the last couple of weeks. COP, EOG, and FANG. So these stocks are all still in my primary list. Shifting over into other stocks and doing our homework, doing our game planning, looking at sector rotation, we're now leaning into industrial stocks. So we're starting to see some industrial stocks such as Spirit, Ingersoll Rand. And again, these are all punching up on higher volume, which is what we want to see, accumulation type bars, EMR, and Raytheon. So Raytheon didn't explode as much on Friday, but it did close near the high. So what are we doing right now? So what we're essentially seeing is still consistent in the oil and gas sector. We're seeing industrial stocks start to perk up. And when I say perk up, we're seeing closes near the high on higher volume. That's what you want to start to see. You want to start to see the smart money say, okay, let's start to accumulate our position, and we'll do it in pieces as it starts to move higher. But you need to do that homework. It's so much more than just looking at the price action. You also need to dig a little bit deeper and to see what kind of volume caused that price action. It's pretty exciting when you're doing your game planning and you start to see a spike up, and you also see a spike up in volume, and that's what we're starting to see in the industrial stocks. Technology stocks had a rough week, a rough start to the last couple of weeks, actually. Not really in play yet. Apple actually has been well offered for a while. We're going to take a look at a few of the top ones there. We get a lot of questions about that. Oh, by the way, if you find these videos helpful, definitely do me a favor, click down and subscribe. You'll get updates. And if you find the content that we give you, and especially have some winners, give us a thumbs up. We'd really appreciate that too. So we're going to take a look at some tech stocks. We're going to take a look at if there are some opportunities there and whether or not you should be actually looking at them at all. And if there is, what will be the price levels that we're going to watch. So I'm going to head back over to the charts. I'm going to take a look at what's typically known as my universe of stocks. And you can see over here, we're going to start out with Amazon. Amazon has basically been trading in this range since last July, got back below there, and it's getting crushed again. This is the reason we haven't actually called out any trades in Amazon for a while. That was essentially the right price. The right price means that there's no support. There's no higher highs. There's no higher lows over time. We've been stuck in this box. Now we're actually trading below this box. So there's nothing to do there at all. Facebook, very similar. Again, we're pointing this out for a very specific reason. Microsoft actually, interestingly, is pulling back into an area that I would consider, and I'll show you why right here. If you are a fan of classic technical analysis, Microsoft is kind of hovering right at the 50-period moving average. So something over 236 would be one of the few tech stocks that I'd actually be looking for right now. And you can see Apple. Apple is more interesting here on the weekly chart to give you a little bit more clarity. We actually had what we call a bearish U-turn here where we peaked out, and then we've had nothing but selling or consolidation since then. So Apple is actually not in play for me right now until I start to see either a bullish U-turn on the daily chart where we reverse to the upside, or quite honestly, it's not even going to be on my radar. And again, this is a big, big part of trading. Financial stocks have actually been okay. JP Morgan, Goldman Sachs, Morgan Stanley, Citigroup, Capital One. Capital One actually punched through new all-time highs, if I'm not mistaken, on Friday. Yes, it did. So again, the right stocks at the right time. I know that sounds like a cliche, but stay away from tech stocks until they give us a reason to want to be buying those stocks. Industrial stocks are starting to turn around. Energy stocks have been strong. They remain strong. Financial stocks have actually been slowly grinding higher and kind of doing it in the background, but Goldman Sachs, Morgan Stanley, JP Morgan, and Citigroup all slowly grinding higher as well after earnings. So again, you don't need to be in everything all the time. You need to be in the stocks that have the market's attention. You need to be in the stocks that are going up right now. Stop guessing stocks that were strong last 6 months ago and thinking that those stocks are going to be a good opportunity now when they're not. You need to read the tape. You need to pay attention to the volume. You need to pay attention to what's the right price, what's the optimal entry in order to be setting up some trades that make sense from a reward potential. I know a lot of people are having a hard time with electric vehicle stocks right now, especially Tesla. A lot of Tesla fans out there that buy the stock no matter what. This is really where you need to determine What is your uncle point? At what point do you trigger a stop loss? At what point do you stop sitting in a trade that's moving against you? It's been a tough go here, but as of right now, I actually like XPEV down at these levels, so that's the one we're going to be taking an eye on. So if you have any questions about these stocks or any of the ideas, again, stick with what's working right now. There's no need to dig too deep. We already pointed out what's going up right now. If you like these ideas, click down, leave a comment. Let me know what you'd like to discuss going forward. And absolutely, if you like it, give us a thumbs up. We really appreciate that too. Have a great day, everybody.